IRS Form 945, Annual Return of Withheld Federal Income Tax. Generally speaking, this is a form used to report withheld federal income tax from non-payroll payments. So some of these would include pensions, like distributions from retirement plans or 401k plans, 457 plans, things of that nature. Military retirement, gambling winnings, Indian gaming profits, certain government payments, and backup withholding. So this is a fairly straightforward form. Generally speaking, most taxpayers will not see this form, and there are a couple of things to keep in mind. Like, just because this is an annual form doesn't mean you should be paying your entire withheld federal income tax all at once when you file it. Just like the IRS has late payment penalties for failure to pay appropriate amount of taxes throughout the tax year, the IRS expects same thing here. Withheld federal income tax needs to be paid pretty much as you go. So if you're filing this form at the end of your tax year and you owe more than $2,500, then you may be subject to a tax penalty. And we'll get into that a little bit more in depth. So kind of pay as you go, and then also at the bottom of this form or at the back of this document, there's Form 945-fee. That's the voucher that you can detach and pay to reconcile your tax return. However, the form instructions are very clear. If you pay by voucher a certain amount that should have been deposited during the tax year, then the IRS may force you to pay a penalty for not paying that when you should have. So don't report on Form 945 any withholding that's required to be reported on Form 1042, which is annual withholding tax return for U.S. source income of foreign persons. So just be sure about that. And generally speaking, these tax returns are expected by January 31st following the calendar year for which you're filing. So the form instructions contain specific filing guidance. Although you can file this electronically, and the IRS highly encourages taxpayers to do so. Simply go to irs.gov/employment e-file, all one word, no dashes, no characters, for more information on electronic filing. However, there are instructions if you choose to file by paper. So we'll go through this. We're going to start at the top, and we're just going to go through Acme Enterprises. So part A, which is basically this part right here, you've got a part where you can check if you don't have to file tax returns in the future. So if you're ceasing business operations, if you go out of business, then this would constitute your final tax return. So we'll just make an estimate that you owe a total of $10,000 in taxes. That's the amount that you were required to withhold. Any backup withholding you can see, that would be basically any required backup withholding. So certain real estate investment trusts, regulated investment companies must report backup withholding in the year that dividends are actually paid. So that would include the January payments of dividends that were declared in October, November, and December of the prior year. So just be careful We'll just say that you had $1,000 of backup withholding, and then the total taxes, we'll say 11,000, and then we'll say that your total deposits were 10,000, and the balance due would be then $1,000. Now, if you are owed an over, if these numbers were reversed and you were owed a refund, then you can either choose to apply that refund to the next tax return, or you can have the IRS send the refund to you. So if line 3 was less than $2,500, you don't need to complete line 7 or IRS Form 945A, which is a more detailed breakdown of when the taxes were actually deposited with the IRS. So, we're going to go through this because we actually need to, and we'll just say that $800 a month. That's $4,000. That's 7,000, 8,000, 9,000, 10,000, 11,000. That ends up being $11,000. So now if you have a tax preparer, you can have that person authorized to discuss the return with the IRS. That would be your third-party designee. So you can have an employee or someone else. You can have your attorney, but you need to have the person's name, a phone number, and then a unique 5-digit PIN number. It's not the same as any information that your paid tax preparer would use down here. This is a specific 5-digit number that the designee can choose, and then that allows the IRS to confirm with that person when they're speaking with them over the phone. So by checking yes in this block, you authorize the IRS to talk to your designee about questions that they might have while processing the return. Your designee would also be authorized to give the IRS any information that's missing, call the IRS about processing the return, or respond to notices about math errors and tax return preparation. So you're not going to authorize your designee to do anything on your behalf, like incur additional taxes or to represent you before the IRS. So you would probably need to actually complete IRS Form 2848 in order to do that. That's the power of attorney form that you can file. Now, depending on the type of business, a sole proprietor, there are different people who must sign. So a sole proprietor would sign for themselves. A corporation would have to be the president, the vice president, or another principal officer that's authorized to sign. If it was a partnership, then basically a responsible and duly authorized partner, member, or officer. If it's a single member LLC, that's a disregarded entity, then it would be the owner or a principal. If it was a trust or an estate, then the fiduciary. So Form 945 may be signed by an authorized agent of the taxpayer if a valid power of attorney, again, IRS Form 2848, has been filed and is on file at the Internal Revenue Service. So that's all we have for this video. On the back are some notes, not a whole lot. If you don't have an EIN, you can apply for one. It takes maybe 5 to 10 minutes on the IRS website. And then be sure to keep an eye out for how you enter your name and address, because you're going to want, this is for the voucher right below, so that you can, so that the IRS has the ability to match up your payment with your 945. So your EIN is crucial, because your EIN goes here and then it goes at the top of your 945, and that's how the IRS and the Treasury Department will be able to reconcile your payment voucher with your actual Form 945. And be sure that you make your check or money order payable to United States Treasury. Don't staple it to your tax return or any other documents. Simply put the check in with the voucher. Again, if you are filing, if you are making a payment, then to avoid a penalty, you should be making payments throughout the year. You should only make a final payment if your total taxes for the year were less than $2,500 and you're paying it full, or if you're a monthly scheduled depositor that's making payments in accordance with the accuracy of deposits rule. So if you're not familiar with that, then you should be setting up a payment method so that you automatically pay with federal tax, on a regular basis. Again, that's all we have for this article, or for this video. If you want, we've actually written a little bit more in depth in an article on our website. Simply go to IRS Form 945. Go to teachmepersonalfinance.com, type in IRS Form 945 in the search bar, and our in-depth guide should appear. If you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions, please post them in the comments section. Thank you very much.